Welcome. Now we can see Mrpl, Manali Refinery Petrol Limited, and Chennai CPCL, Chennai Petroleum Corporation Limited. These are all very high beta, high risk stocks and government companies. They are proxy for crude oil. So it will be very much correlated to crude oil price movements. They have a very volatile movement daily, around 3 to 10%. That I will show you with my real-time screenshots. And also, as I told, if you capture that at the bottom, we can write the volatility and make profit. Also they provide some dividend also, so that is very important. So as I told, high risk high reward. So you have to write the volatility, find out, and you have to capture. These are both Mrpl and CPCL or crude oil proxy, as I told. And dividends, they will not give regular dividends. Sometimes they pay the dividend, and you can see that. You can see Mrpl share dividend. Tomorrow there is a dividend, 4 rupees they are paying, but previously 2024 they paid 2 rupees, 1 rupees, like that. 2019 they are not, in between they are paying not regularly each year Mrpl. So but it is very volatile. If you exactly find the bottom, catch the bottom, for which I will help you, we can make good profit. So it is beta 1.64. It means Nifty moves 100 points, means this Mrpl beta 1.64, it will move 164 points. So highly volatile, like that. Chennai Petroleum CPCL also dividend is free. 25 they have paid 5 rupees, before 24 55 rupees, like that. It is somewhat better than Mrpl Chennai Petroleum. So they are paying dividend not continuously but somewhat better, here and there they are paying. So the beta is 1.15. So now we can see the volatility. You can see real time screenshots I have taken. Date you can see, arrow mark you can see Chennai Petroleum some 5%, Mrpl same day 0.83. You can see other, I told crude proxy shares. Actually they are basically, they both are refinery stocks. They will refine the crude oil. Whenever crude price goes, the refine refinery margin will go up. So they will also go up. If crude comes down, they will also come down. So mostly correlated to crude oil. You can see another nearly 2.2% Mrpl. It has gone, and you can see when it fall 8% due to recent market crash. Chennai Petroleum 7%, Mrpl 8%. You can see the one-day candle movement of Chennai Petroleum in Mrpl. Very big candles. Suddenly it goes down. So minimum 3 to 10% variation will be there very frequently. So how to catch the bottom and make profit, that I will explain now. You can see this is the sale chart. So you can find the bottom, of course, but exactly you have to catch the bottom, that I will explain in the below slide. You can see now sale. When you make a channel, it will be easy. You have to exactly catch the swing bottom. You can see at the left hand side bottom, and exit at the top end of the swing top. You have to exit. So along with the channel, it will be easy for you to identify the bottom also, because when it comes to the bottom already it is beaten down. So from there you have to make an entry, and bottom middle end of the swing is there. Middle end of the swing to bottom end of the swing bottom, it will be discount zone where you have to enter. You have to try to enter above the middle end of the channel to top end of the channel swing top. It will be premium zone where you have to look for exit with profit. These are all legend color code. We can see the chart now. That is very important. So Chennai Petroleum, you can see now presently it is having a trend line support. This is a short term trend line support, and you can see it is taking support at the trend lines. And presently if you see, it is below the middle end of the channel. So what I told, if it is below the middle end of the channel and above the top end of the channel, it is a discount zone where you can look for some entry. So what will happen, presently it is taking support at trend line. Below there is a multi-day support line. Again there's a gap line. Again there's a stop loss hunting line. What is stop loss hunting line? At the end of the video you will know. Generally stop loss hunting line means you have to be very careful. It will eat your stop losses. Below there is multi-month stop loss hunting line. So presently it is coming down due to crude oil issue. So bottom end of the channel you can see 829. So if you see bottom end of the channel 829, the range above is 1164. So almost 200 250 rupees range is there. So if it gives a breakout, first it has to go and touch the gap line. Also middle end of the channel will act as a resistance. Then there is a stop loss hunting line. Also multi-week, you can see the red dotted line, multi-week resistance line. If it gives breakout above this, then it will go and touch here. Above that, again it will touch the top end of the channel, Chennai Petroleum. So probably you have to make entry only after it gives a breakout, big candle, high volume breakout above this stop loss hunting line. So this is Chennai Petroleum. Now we can see Manali Refineries, MRPL. If you see, actually this is at the top end of the channel. You can see almost top end of the channel MRPL is there. So as I told, this is in premium zone. You should not look for any entry. If you are already having, maybe you can try to exit. So it is taking support at the trend line and it is very near to the top end. So bottom end it is here. So 143 top 206, almost 55 rupees, 60 rupees range is there. So there is a below this trend line support, there is a another support 183, 183. Below there is a stop loss hunting line. Probably it should come there. Above there is a gap line also there. Below middle end of the channel will act as a support when it comes from upside. There is a gap line. Again there is a gap line. Sorry, gap line. Again there is a stop loss hunting line. So for high risk investors, they can wait till it comes below around the middle end of the channel and gives a break pullback. If there's a pullback around the middle end of the channel, then high risk investors they can consider entry. Low risk investors they can wait till it falls below the middle end of the channel so that it comes to the discount zone. There you can take entry, or you can wait till the bottom end of the channel and take entry. Gaps are there so that already it would have got beaten down. So the risk reward will be high. If you take now entry, the risk reward will be low because it is highly volatile. Suddenly it can come and fall below. So better you have to wait. But Chennai Petroleum, as I told, it is having better risk reward. As I told, it is above the just above the bottom end of the channel and middle end of the channel. So whenever now you can consider some staggered entry if you want as per your risk category. So now this is the channel based on channel, and these lines are based on supply and demand. That is big institutions they will place the resistance line under. So if you like this video, please share and do the needful. Definitely this will be very useful for you. I believe definitely next time we'll come and refer these levels. Instead of doing options buying, this will be better. For people who lost their money in options buying regularly, this will be a better option. Even if it falls, you will get some dividend. Thank you. Please subscribe and like when you come back again. Thank you.